And it's called pretty much called Preparing for Another Global Lockdown. Hello, everybody. This is the Equity Management Academy Weekend Podcast for August 26, 2021, titled Gold Preparing for Another Global Lockdown. Summary. We are heading toward what could be greater volatility in the markets as we move into the later part of this year. If we go into another lockdown in Europe, it is going to cause the supply chain for many goods significant problems. On Labor Day, 7.5 million Americans will lose their unemployment aid. This is happening in the face of another surging pandemic which is spreading in Europe. Gold is trading at 1788.10, down about 290. We've seen a bit of choppiness this morning as we got some new economic numbers related to unemployment claims, which were higher than expected. They were at about 335,000 new claims. On Labor Day, 7.5 million Americans will lose their unemployment aid. This is happening in the face of another surging pandemic, which is spreading in Europe to the point where they are considering closing their borders to the U.S. We are heading toward what could be greater volatility in the markets. As we move into the later part of this year, the stimulus and infrastructure package being negotiated in U.S. today is just another additional amount of stimulus, which is beginning to more rapidly erode the value of the U.S. dollar. The market appears to be anticipating that the current inflation levels are not going to be transitory. If we go into another lockdown in Europe, it is going to cause the supply chain for many goods significant problems. There's a possibility that the global economy could be locked down again. China closed their ports for a few weeks. They are reopening them, but it caused additional problems in global supply chains. The Fed may not lean towards raising interest rates during such times. They may not even talk about raising them in this environment. If anything, interest rates may be pushed lower. It does not look like raising interest rates is in the cards for the foreseeable future. Gold is undervalued compared to inflation rates right now, which are about 5%. The 10-year note is at 134. The spread is going to increase as the inflation factor becomes more dominant and permanent. We're going to see a lot of money going to precious metals, especially money that is afraid of going into cryptocurrencies because they are new and far less regulated. Precious metals appear to be set to become part of the new monetary system. The new system needs to include gold, unless everything is fiat currency and we plan to live in a fantasy world of fiat currencies and fiat values. Such a fantasy land is where we appear to be headed more and more stimulus. Even as purchasing power declines and our lifestyles are eroded more and more, real estate stocks and various hard assets are rising in price, not so much because they are worth more, but because the U.S. dollar in which they are priced is losing value. We trade Bitcoin, which is the leading instrument for digital currencies. It appears to be set to play a major part in the global monetary reset. On August 20, 2021, in our weekly gold report based on our variable changing price momentum indicator, the VCPMI, we said that the weekly trend momentum of 1794 was bearish as the variable changing price momentum indicator. However, the VCPMI weekly indicator was bullish with a target of 1796. The market rose to 1796, meeting the target and reaching 1812. We've been trading back down into this 1784 level, which has activated a bullish price momentum. The low was 1782.90, and the buy one level coming in today was 1783. Now, we have activated 1796 again and 1810 for this week as targets. In silver, we are looking at a buy signal from the VCPMI daily buy one level of 2363. The only thing about the signal is the conflicting signal with a weekly sell one signal of 2367. So we are in conflict between the weekly sell and the weekly buy signals. This is a mixed signal, so there is a risk if you buy or sell at these levels. With the economic meeting at Jackson Hole tomorrow, the market will be choppy today. Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, EMA2trade.com, or listen to any of our previous episodes.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.